Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Wednesday, June 17, 2020, about 4:40 in the afternoon Central Time. So in the dollar, well, what we had, and I'll point to that first, up a little bit. That put some pressure on the gold throughout the day, and the dollar came off its highs, about 20 points, but still closed up on the day. Euro is lower on the day. Got down to an interesting area that in the financial video, I'll show you what that did. In the metals, well, we are looking at silver, and I'm talking base metals, and copper acting well. Platinum slipped back a little bit. So let's go right to the chart action, because we just, as you see, the board's cleared, and I want to get as much as I can in for you. That means it's 4:45 now. When we look at the break we had on a weekly chart, and I've highlighted that all for you here, you had an $80 break, and you've come back and you're just sort of flatlining right here. In round figures, about $27 under that high close, but not giving up the bullish bias. That's the first thing. When we look at the chart action, what you're doing is you're coming down on one slope, up on the bottom. Got that? So you can see right here, you're coming down, and here you're going up, and in the process, you have created a pattern of higher lows and lower highs. That is not a trend. A trend happens two ways. Get up and over 1741.30, you get an uptrend. Get down under 1706.20, you get a downtrend. The line in the sand is here now. Where are we? We're dead center. Look at how you're stuck on this 18-day average of closes. So that's the first thing. If you break out from the upside, one of the areas that you could be going back to would be the 1762.70, and if you break out to the downside, the 1694.20 area. So there's a little less opportunity for profit to the Bollinger Band on the downside than there is to the upside. When we take a look at momentum, the momentum is pointing up, but we're already in overbought territory. So the question is, if you buy even higher than this, about $6, $7 higher, if to get up over that 1741.30, in other words, you buy it over that, you're going to be even more overbought. In other words, a dangerous situation for either side. I've given you the points, and you're stuck in this sideways action that you can actually see how well it's formed in these Bollinger Bands. In the gold silver, I'm looking for edges here. I can see that at least the market's correcting where the silver's trying to get back to the 18-day average. But remember, when you're over that, the bias lies to the gold over the silver. That's because you need more ounces of silver to buy an ounce of gold. What do we have in silver? We're forming a classic pipe. Do you see how this is now going totally sideways on you? It's similar to what we did here. So the question is, do we have a pattern to trade? And I have to tell you, you don't. You have a higher high, you have a lower low. I expect whipsaws back and forth in that pipe. In looking at momentum, it's trying to turn itself up, but the bias is still down because you're under the 18-day average of closes. In the copper market, we have corrected an overbought condition. Now, you had an embedded reading right through here. It's when the K and the D lines, the red and the blue, are going sideways for several days or more over the 80 level. When it's lost, just the way it was here, one of the numbers, and it'll be the K line, gets under 80, and unless it gets back over 80 immediately the next day, which it did not do, the odds favor that price is going to drop down to the closest moving average, which in this case is the 18-day average of closes. The market had a day or two of an attempt at it, but it stalled. So to me, it still owes that number. Is there anything on this chart that can turn it bullish? Not really. Or is there? Well, let me tell you what could happen. You got to use your imagination here. If we take a look, we have an outside day down. That's the first thing. I have a theory. If in 2 days, within 2 days of making that high, which you didn't do today, if you were to take it out tomorrow, the odds strongly favor the price is going back to the Bollinger Band. It would be the closest moving average above the market, or the Bollinger Band. In this case, it's the band. If that doesn't happen tomorrow, then the odds still are with the idea that the lost momentum is going to carry prices back to 251, let's call it 40. in this market. I think tomorrow's an important day in copper. In the platinum, you can see you've been in a downtrend. You hit the objective of the Bollinger Band. You've bounced back up to the 100-day average, and it seems to be that's where this market's fighting its battle. Now, a couple of things are interesting. The bears have control of the market here. Momentum was oversold. It is flipped around, and it is still oversold. Why? Because the D line, the dark line, is still under 30. Should this market get over 847.80, you would negate the downtrend. To get bullish the market, you need a close over the 18-day average of 856.70. So bears are in control still, unless you take out this 847.80, and you could be targeting if you break to the 811.20 zone. In the platinum, you're just getting into this narrow pipe. Do you see how this is all of a sudden come in from here, and it's coming in day upon day? Remember, I tell you this, avoid trading in these. They're very, very vicious. You get frustrated because you think you got a trend, then it loses the trend, then it tries to put it back on. I've seen this, done it, and it's like putting holes in yourself because you walk out of there dizzy. You're going, why didn't it follow through? Why didn't it do this? It attempted a breakout, and it goes nowhere. In the dollar index, I'm still looking to see, can the market get itself back up to the 97.45.50 level. That's the number I'm looking for, right into this 18-day average of closes. You had a pattern of a lower low and a higher high. I could make the argument, and should make it, that you can take this down arrow away and have as pointing as an up arrow right here. So I've got both numbers. I've got higher lows in the market, and I have a higher high, but I'm under the 18-day average. So the battleground should be, this market should make an attempt, ideally, to that number. Now, if we take a look at today's high of 97.35, it did not take out the old high here of 97.46.5. If this market were to just not take that out and drop under 96.38.5, which is far away, it's a 70-point drop, you could get a whole bearish signal again. It's easier for the market to go to that 18-day average and try to figure out what to do next. You know, I told you I've put together my combo of the videos that I do in the morning for subscribers and the one in the afternoon that I do for the spiders. So let me tell you how this all works. At about 5:40 in the morning, I do my first video. And my first video, if I can get this to work, there you go. My first video will touch on all the futures markets. I do 40 charts on that one. It's 5:40 in the morning. I record, I post, unless something happens. And today I got hung up. I don't know if you've installed the new Windows 10, but trust me, it's problematic in that it takes an hour to install. At least it did on my computer, and it threw my day off. But I cover 40 charts there and approximately 34 charts. In fact, with today, we're going to have to redo the ad. I added another one today, so I'm up to 35 charts now on the ETF. We want to add another one after that called BETZ, which is the bets one, but there's only 7 days of trading. But I like this gaming idea, so I look at that. I look at the pot stocks. I look at all the other parts of it. You know, you want to get a certain other category where it's the hot markets, and then you want to get your normal ETFs and spiders. But I covered that in the afternoon. That's already posted. So my traders that are ETF spider traders have already got that. They see what that's about. In the morning, they want a combo so they can look at the futures. You do realize once you go into markets like energies, the QQQs, the SPYs, DIAs, they follow what the futures did overnight. That's the first thing. The sectors are a little bit different. The sectors will trade very different than all that because what they're doing is they're looking at the individual stocks within those indices. So what we did is we put together for you an idea. How do you get this? 30 days for both, $16.90. After that, every 30 days, $28. That's a pretty good deal if you think about it. You might want to give it a try. And to do so, all you've got to do is go to our website at www.iraepstein.com. Under the word research, click on the morning subscriber or the ETF. It's there. You can always call my staff. They'll help you with it right away. I'm Ira. You have a good day, and I'll see you tomorrow.